Hi, I'm Jason Jessup. I'm the CEO of Magna Mining. Magna is a Sudbury-focused exploration development company with copper nickel assets and well advanced and moving forward.
Good to see you. Good to see you. How's PDAC going next door?
PDAC has been really good this year, actually. It's been very productive, a lot of good meetings. You know, our team's telling me lots of traffic down at the booth, so yeah, it's been well worth it.
Yeah, usually sometimes you come here and you can see right the way down the corridor, right? This year it's kind of rammed. I'm trying to work out what with, who with. Is it lots of companies or have we got investors in town?
So I have been really busy in meetings outside of the investor hall, but from what my team's been telling me, a lot of good meetings. A lot of our existing investors have been coming around the booth.
Right.
Some new investors, a lot of sort of key stakeholders who are involved in our project. So it's been really, really good for networking as well as for investors.
Okay, well let's talk about the thematic of nickel first, because it's going to inform probably how you choose to play this year. A lot of people, writing in, phoning in, etc., and talking about Indonesia. They can't get away from it. Indonesia is going to flood the market. What's the point?
Yeah, that's definitely been, the conversation we've been hearing and talking about for the last probably 6 weeks steady. And, I think it really has done a lot of damage to the nickel price, and I think somewhat prematurely or incorrectly. Jim Lennon, who just from Macquarie just came out with an interesting article. I'm sure anyone that follows nickel has probably seen it. But I think that some of the predictions about how much nickel and how quickly it was going to come onto the market is probably wrong. And we've seen over the last couple of weeks about a 10% increase in the price of nickel, getting back close to $8 a pound US now, which for a company like ours is an absolute great price. And we are a Sudbury now, as I said, copper nickel producer, nickel copper producer. It's almost 1-to-1. A lot of exposure to both. So yeah, at $8 nickel and copper anywhere above sort of 350, our projects are great. So I think that's probably a range we're going to see is sort of that $8 US to $10 US a pound range. We're not going to see nickel just drop out of sight. We're not going to see $5 or $6 nickel. It really, I think the floor price is probably $7, where you start to see mines shutting down. And even Indonesian nickel, there's not a lot of transparency in what the cost to produce in Indonesia is. Everyone says it's low cost, but it isn't really a very transparent country as far as what the mining costs are. What I've heard anecdotally and from people that have been in Indonesia and seen these operations and know more about nickel than I do even, they're saying like $8 nickel is probably where they need to be for a lot of these operations and to have any investment to continue to build them. So between delays in permits, slower ramp ups, probably less production coming online the next couple of years than what was probably predicted last fall. I think we're going to see a rebound in the nickel price. Probably is going to get capped at around $10 in the short term over the next couple of years. But I think it'll trade in that sort of $8 to $10 range.
It's interesting indeed, because Jim, he physically went there.
Yes.
He went to China, had a look, came back, wrote up that report. So not only the inventory levels less than perhaps people realize, but yeah, the supply side of things does affect the position. I think one of your contemporaries, a guy called Mark Selby, kind of ripped into Wood Mackenzie for a little bit of lazy forecasting. That's had quite the response.
Yeah, I didn't see that, but good on Mark. to call them on that.
Well, it felt like it's time to name names, because what happens is you kind of got like 4 people who kind of do the work, and Mark would argue badly, and then you've got the banks then take that core data and then tweak it to their own into their own models, and then go out and then talk to the market. And the market perhaps not getting the correct information, I guess, where Mark was going with that. And that's very damaging.
Absolutely. And now that is the dynamic of our business, though. And you'll have these price fluctuations based on, sometimes the best information that's out there, but also sometimes incorrect information. And it creates a buying opportunity, I think, for investors who see this and are smarter than, say, the average crowd. And I think that's what this is right now. It's a buying opportunity.
Right. Okay. Given that backdrop, context, etc., this year, what does Shakespeare and Crean hold for you? How do you play it? How do you allocate capital? What's the best thing that you can do to kind of drive value?
So there's so much going on right now with Magna. I'd probably need an hour, so I'm going to really condense it.
Okay.
So we received on Monday, we announced we have our file closure plan.
Yeah.
So what that means is that is sort of the key approval we need to move from state of closure to a state of production. And we're going to start with advanced exploration. It's going to be a surface bulk sample in our 109 footwall zone, high grade PGMs with nickel and copper. And then we're going to develop a ramp to go underground. The way it's drafted right now in this amended closure plan, which we will amend again later this year and continue amending as we further define the life of mine plan. But it outlines 400,000 tons, so that'll give us at least 2.5 years of production. Lots of runway to figure out exactly what life of mine plan looks like, and to continue selling ore to one of the existing mills. We are still on track to get a announcement on a ore selling agreement before the end of this month. That's great news. I think it's going to be really exciting for our company and really set the framework for the economics of what this can really look like.
Yeah.
And then the last thing we need before we start the underground portion of our advanced exploration is our permit to take water, dewater the mine. That's all moving ahead very quickly, and we fully expect to have that in Q2. So all these things happening, it's going to be a pretty exciting time. Now, the question is, how are you going to finance it? And one of the great things, again, about our projects being brownfield, being very simple, near surface, high grade, is it's not going to take a tremendous amount of capital, especially for a company, that's us today, about $70 million. So what we're looking at doing, and partially because it's the right thing to do, and this also it's sort of the easiest thing to do in the capital markets right now, is we're looking at both grants from the government to help fund the advanced exploration and the construction of Crean Hill, as well as potentially selling a royalty or a stream on the precious metal byproducts. And that potentially could be fully funding without any equity the development of Crean Hill. And so what's that right number? We haven't published a formal study yet, but in the PEA we had last summer, we estimated $48 million. That's probably a pretty good range of what it'll look like. That being said, we are in the process of updating a resource for Crean Hill based on the resource we previously announced, 31 million tons between open pit and underground, the indicated category, and the 19,000 or so meters of drilling we did last year. So as you recall in some of our interviews and some of your listeners have seen, there's some spectacular grades, especially in our footwall areas. We think this is going to really improve the resource in those areas. So this new resource can be very telling. With that, we'll be coming out with a revised plan.
Okay.
And the revised plan, based on the PEA that we had, will be at higher cutoff grades, slightly lower tonnages over life of mine, but much higher margins. So that's what we're working on right now, and hopefully we'll have that resource announced and completed before the end of June. So lots and lots happening right now.
Yeah.
We're really excited. We're still, in a good cash position. We have 3 drills turning, 2 of them at Crean Hill, and then 1 out at Shakespeare doing regional targeting.
Okay, and like I say, there's lots to kind of get into it. Maybe we'll do it another time, not here at PDAC. The way that kind of people are viewing Canadian mining at the moment is interesting. It's clearly risk off, right? But there's also this desire for companies to get into revenue sooner than historically they would normally want to rush into it. So we'll drill this thing out, we'll show scale, right? You guys with the tolling, you guys with sort of the talk you've just given us is saying, well, we are going to be that get into revenue sooner kind of company. That's good. What are the kind of dangers that you're kind of aware of? What are the things that you think, well, we don't want to misstep here? We want to get there quickly, but we've got to get certain things right. What are you focused on?
So there's, as you know, in this industry, it's just full of risks, right?
Yeah.
And being from the operations side of the business, we really look at those operational type risks.
Yeah.
And getting back into any kind of production, we really need to do a proper evaluation of the risks and then plan to mitigate them. I'm really, really pleased that we were able to hire Jeff Huffman as our COO last November. Jeff came as the president of a mining contractor, building mines all over across North America. And his expertise, and I've worked with Jeff in the past, he's also an ex-FNX mining person. So I have utmost confidence in the work he's going to do and the team he's going to lead to advance Crean Hill. So Jeff's done, a great job at identifying risks, mitigating risks, doing the engineering work, continuing to de-risk the project. But to a large degree, we've done this before. We've reopened Sudbury past-producing Inco mines. We understand the challenges. We understand the opportunities. So yeah, we're going to do it well thought out, but these aren't complicated projects. I always joke with people, I only do projects that are simple, so I understand them. And it's a simple project. You drive a ramp, you bring ore to surface, you crush it, you sample it, you ship it to a mill, you get paid. Very simple.
Okay. And we'll leave it there. And keep it simple, right?
That's
no,
it.
but I think there's something in you say. We had someone in yesterday, and the story was the most convoluted story because it was very convoluted on the ground. They wanted lots of optionality on lots of different things, and it's like by the end of it, I was more confused than before I started. And I think you got to tell the story simply, but it's also got to be a really simple set of goals and targets for your company, as you described. Let's just keep this thing simple.
That's
Doesn't
great,
need to be complicated. Good. Okay.
Excellent.
You better go.
All right. Thanks a lot.